Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. We're going to get a little blast tonight, early UTC from the sun. And the bigger question is that that's that big bright thing up in the sky most days of the week. That there are two different corona mass ejections. That's what CME stands for. It's going to blast towards the Earth. It's not going to be very. It's not going to be very scary. The only question mark is: are they going to combine together? That's one has eaten another one already and gotten larger. So this is going to be very interesting. There used to be a market technician that used to, before there was quantitative easing, he would do. Let's see. Oh, there we go. I'm live. So let's get that thing going there. Yes, indeed. Dukascopy. Excellent. I just saw a post on that. Let's open up the chat line, too, at the same time. And so, anyway, this technician used to follow these blasts from the sun over the decades. And it'd be very good insight to the way the markets are moving. But ever since quantitative easing, the central bank has taken it over. Yes, indeed. The central bank is now the sun, the stars, and the moon. Anyhow, that's what's going to be a little exciting for most of us in the United States, probably going into late tonight. For a lot of you, like in Lafayette and so forth, I'm sure you'll see the aurora from it at early tomorrow morning, I guess it'll be, 5 in the morning or something like that, 5 a.m., 6 a.m. And it'll be, we'll see how that goes. I'm not worried about it too much. I don't think it's going to do anything particular. Like I said, one CME has been eating up the others as it's heading towards Earth and combining together. So there's two left to combine together. We'll see what kind of action we get from it. Looking at the charts, this morning stock markets are kind of quiet, down a little bit for the day. Nothing major yet. It's all starting off on a quiet note. Interest rates are, kind of gravitating up. The GDP estimates for the final read is supposed to be like 7, possibly 7.1 in the United States. So that's pretty cool. That's compared to the closed economy, and the markets have been watching that closed economy and slowly work its way out of it. And the unemployment numbers that'll come out on Friday should match to where they left off in February of, February of 2000, right before the lockdowns and the COVID crazy that went on. And, so basically something like that. We should see we're back to normal, I guess you could say. We're back to normal. All right, let's get going along here. You can see the Swiss this morning. You see the Swiss is moving down. That means the dollar is going down in value, not up. Challenging some interesting area there. You can see the white line is getting ready to pierce the J4X. And you can see we have a little peak here in that volume indicator that Kelly brought to us. So we're keeping an eye on all of that at this point in time. The hinky is red. And let's see what it looks like. Let's see if we fix that. Like that. There we go. And let's move this over like so. There we are. You see the same thing going on there, where the Swiss on Chicago Quant is doing the same exact thing. We got one red dot. Had a green yesterday. And it looks like we're pushing back into the from a buy of 2 days to a sell again. I'm not sure where the line got to. Let's fix that. So we went into the buy there. There we go. Whoa, not that. That's not right. Where'd the line go? I had a line in there. It amazes me how it does that. So, oh, wait a second. There it is right there. Let's fix the color of that. That's what it is. Right there and there. So we went into the buy there. It basically went nowhere. I mean, the next day it did go back up again, but didn't take out the high there, you notice. And now it's pressing into the sell. And we're basically, looks like we'll have a sell going into the close today. And you can see, oh, that's another thing too. Look at the weekly. The weekly has started to really break down. So maybe we're going to see some dollar action on the downside. And yesterday was that wish trip of maybe we could see some peace in Europe. Can't believe it. There's a war in Europe. How weird. All right, what else can we say about any of this? I guess that's about it. We've basically seen the mechanics of it all. Oh, let's check to see the chat line too. Right there. Skip the ad. Nope, nothing. Nobody chatting. Okay. So on looking at the Swiss against the dollar, we're seeing weakness. Ta-da! Now we'll go over to the euro, and the euro is screaming on the upside again, I believe, today. Maybe it's a sign. I don't know. Yeah, look at that. Now we went into the buy there yesterday, and look at today. Looking extremely firm. Let's do it there. Now where is the buy line? Because sworn we put that in there. There we are. And so it's moving up again. We think we're looking for like the at least between, you know, like, oh, I guess that's at the 113.5 area, something like that, all the way up to 115. You can see the weekly right here on Chicago Quant is fighting to get into the plus. You know, that echo of the 5 is ripping. If these two were much more closer, I would really think there's even way more tenacious strength coming around the corner. As you see here on J4X, again, another peak, just like in the Swiss. And at the same time, you can see the white line is cleanly pierced through. And last but not least, you can see the Hinky-Ashi bar. Both are green, just like we are here on Chicago Quant. So not bad. Hey, Albert, how are you? Ready for another fun-filled trading day? Take a sip of our tea. Seems like, you know, the markets overall seem to be really sideways and choppy. Not dramatically choppy, just choppy like normal, you know, normal action. We don't really see a lot of percentage changes going on. I mean, individual things, but overall, the broad spectrum seems to be, you know, sideways, constantly constantly chopping up and down, staying inside their ranges. You know, it seems to me at this point in time that the markets really don't have a lot of conviction, and I would think that if Europe would just, you know, Russia in particular, would find a way to walk back some of its adventurism, you know, maybe we could be paying attention to economics more than geopolitical stuff, which would be really nice. Anyhow, that is the action we're seeing, and you can see here the euro is benefiting from it. So we got two products moving in strength against the dollar, which has to be a sign for something more than maybe, you know, we would love to see, like you see here, you know, getting through the weekly buy. Maybe it's a beginning of something. You know, we'll hope. We hope. Let's jump over to the cable. Let's see what the cable looks like right there. You see cable's been red for a bunch of days. There's 4. This is the 5th day. White line is turning up, and again, Kelly's volume indicator that we've been trying to pay attention to has a peak again. So a lot of times that has a lot of noise to it. Hey Kelly, how you doing? I put the MA yesterday onto the Ask Bid indicator. MA based on dash line, and it's more useful trying to read it. Thanks for the tip. No problem. It made sense to me. Smoothing out. That is. How do I say this without sounding too eggheadish? The whole concept of smoothing out a average can be very insightful, and that's automatically when I saw that I thought it's going to take out some of those shallow points and emphasize the peaks a little bit more. Do you find that the peaks seem to be really important around major bottoms and tops? Dramatic bottoms and tops. AFA, hello. Sideways, right? I know. This quantitative easing across the planet since 2008, it's forced us all into a channel or a sideways chop. Remember, the quantitative easing, its objective is stability. They want the world to be stable. They don't want anybody to be nervous. They want everybody to be happy and smile. That's what that's all about. Yo, Robin! Feel free to ask questions. I like that. Push them I like that. I need that intellectual stimulation. Just to get me going. It's like the trading floors. Don't you, Robin, miss the days where we could stand on the floor and have conversations in different directions from different types of people? Smart people, simple people, experienced people, amateurs. Just that thirst of yakking away. And the stories and the ideas. Just like Kelly and I talking about the idea of some way of smoothing out an indicator. It was enlightening, and I always think of my webinars as the cyber trading pit. So it kind of makes me hungry for people to, just to throw ideas out there, and we look at them and we go, hey, what is that? Is that the dumbest idea in the world, or is that the smartest idea in the world? You never know. I always say there are no dumb questions in trading. There are, when you're dealing with money, all there are is short answers or long answers, but there are no dumb questions. But you can get some really strange answers over the years and decades. All right, from there you can see this. Let's put cable up on Chicago Quant. There's there, and it's moving up too. You see here, it's trying to support the bottom end of the range here. You can see the weekly is trying to turn up pretty hard here. The daily is that's the weekly right there. The daily is trying to get into the plus. Boy, they're really dragging their feet there, aren't they? Hey, make money online. I like that. What a good name. Would you please taking a look at the GBP NZD so I would be able to enrich myself about educating about the pair, and of course rest of the folks can gain something out of it also. Why, thank you. And AFA says something there. Let's go to GBP NZD, and then we'll answer AFAs. Aussie yen. Yeah, we have a client following the Aussie yen. Aussie yen shows an opportunity to buy. What do you think? I think I saw it this morning. I think I got a green line through it. Let me answer making money online, and we'll go over to AUD. Let's see. First of all, let's go to GBP NZD. GBP NZ. There's GBP JPY. There's GBP. Is there two JPYs? No, it must be just one. And there's a GBP CAD, a GBP Swiss. No, we don't. Let's build one of those. Let's see, where is that? GBP. We're going to take the CAD, activate it, copy it, and then slide it right in. But just off while we're waiting here. Yeah, AFA, I saw that. I saw that strength. I thought that was interesting myself. But then, some of these, what they would consider not major pairs, but minor pairs. I don't even know if they classify things like that anymore. But I've noticed that the minor pairs can be really, really good to trade. They really can. There it is, NZD. Here it comes. we used to have a webinar analyst, Janash. I remember towards the end of him, breaking away. He was originally from Canada, and I think he was living in Thailand. Last we talked to him, and that was the gist of it all, really. That the minor pairs trades had become much more active and less minor. You can see here it went into the weekly sell right there. Let's emphasize that. And you can see there that it closed, the white line and the histogram closed underneath the zero line right here. Let's just put the zero line in too, like that. So it closed underneath that. That pushed it into the weekly sell right there. And it's been in there for 2, 3, 4, 5. This is the 6th week now. Look at the nice trend you get out of that on a daily too. We're going to widen that a little bit. So we take that red, went into the sell there. Before it had went into the sell off of that dot thing there. Also, let's get it up on the J4X so you can see the level of coordination between the two. So what is that? GBP NZD. Let's see, which one is it? GBP / NZD. There it is there. And there it is on J4X too at the same time. Probably lots of red on the Hinky ASCII bars. You can see all the red we've had here on the Chicago Quant. Yeah, see that? Look at all that nice red. Let's see, what else can we say about it? Yeah, look at that. Same type of action. That's why we have this up on the we use this and on the webinar at the same time. And then you can see it went into a buy here. Let's see where it went into the buy. Was it there? No. Right there, right there. So that one was the buy. So let's move one of these greens over to it now. And then it grabbed the red again because it went back into the sell right there. And it tried to go into a buy. It did go into the buy right there on the 28th. So let's grab a green again. And it's back into the sell again. Yesterday it went into the sell again. Now for traders that might be new here, what you do is when we have the weekly in a buy, you can play the buy side if you're just trading the pairs trade or the futures contract or the spot or however you want to call it. And then you cover yourself and don't have a position if it goes into a sell, and then jump right back in again. And then in this case here, it gets into the weekly sell here, and our daily sell tells us not to be long here anymore, even within a weekly buy. You're just not short yet. Then, unless you're trading binaries or options, you don't want to really separate yourself from the weekly and daily signals, because you can get stopped out and then back again, because it's the beginning of a move. Our math picks up the beginning of a move and it ebb and flows from there. So, okay. We're working on the GBP NZD. Let me just answer. Oh, hi, Smith. There's Mike Smith. Hey, Mike. I entered a bit late. Could you do a short recap? Most definitely, definitely. And I answer everybody in order. And make money online. Yeah. Other than the J4X software, are you using side by side? That's our Chicago Quant. That's my proprietary trading software I use. I invented back about 40 some odd years ago, 45 years ago, and so we came up with a way of emulating it without giving away my mathematics, and so we use a fast, and this will help out Mike Smith. What this is this is J4X. This is the Dukascopy platform. This is my Chicago Quant work right here on the second side of it. If you can see, am I doing it right? Yeah, like that. There we are. This right here. So, and what the white and golden dashed lines do is they emulate the zero line. So in other words, see how it breaks here? There's a zero line, and they break underneath. When the white line pierces the dashed line, it's a bearish signal, and as you can see, it reflects pretty well. In this case here, it bounced in the bottom area in here, and then it jumped across the line. It jumped across it, failed, jumped again across it, and finally ran. If we compare our daily, obviously my daily is much ahead of everything else, but this is the best you're going to get in a free indicator right here using the J4X. See how it breaks down here, and it emulates it. And so what we do is we use a fast stochastic and a slow stochastic and make them compete against each other. We use the Hinky-Ashke bars to emulate my red dots, and the Hinky-Ashke is about 68% accurate to my dots. The same thing with the fast and slow stochastic. And then down at the bottom, one of our traders here, Kelly, we've been experimenting with some volume indications. That's what this is down here at the below. We've noticed it peaks out. This is called the, I think it's called the, there it is, I just put it up on the screen, Ask Bid Volume. And it has some insight to kind of major moves at times. You know, see the peak here? When it takes out previous peaks, it can mean that there's a change coming. And you can see it did. The change did come. And in our case here, when was that? That was the 10th. So let's just widen our math here and look at where we were on the 10th. March 10th, there's the 7th, 8th, 9th, there's the 10th. And we got, there's the 10th, so we get a bottom out of it here. We go into a daily buy on the 12th or the 14th, because it's the 11th is a Friday. Monday it goes into a buy, goes up for a couple days, fails, or not fails, but just goes into a sell because we're in a weekly sell here. So we don't want to trade this on the upside. We just don't want to be short anymore from, if you're short from this area here because the signal gave us a short, then you would think about covering when this gets into a buy, and that's where it got into the buy. So right in here. So you get that winner, winner, chicken dinner. All right. So we give you a good generality, and you can see also the weekly buy there, and then now we're going to go off to the next adventure. That's where it went into the weekly buy on the GBP NZD and had a great run for a while. That was really nice. So come on back and we can look at it, or if you want to see more, I'll go through it with you making money. Now I jump over to AFA, and let's go find, you know what, let me see. I don't know if I have that in there, but let me go show you what we send out to our clients. Maybe we do. There it is right there. We do have it, so I don't have to show you that. It's the same thing. You can see here we've been in a daily buy since here. And, you know, went into a daily buy there. Went into a sell for one day. Right back into the buy. But we've been in a weekly buy since here. So, you know, you can't take any shorts. You only can trade the longs. I think that's where the weekly buy went. Let's just check and see. Yep, that's where the weekly buy started. Right there. And let me just point out how again. It got through the zero line here. That zero line. And it closed that week. You can see it right there. Plot 1 was 0.02. Plot 4 was 0.04. And so that's the signal that it's into a weekly buy when it settles there. Or if it's trading above it and then settles there, it guarantees it's the signal. So, and then you get into a daily buy right there. Matter of fact, Robin and I wrote an article about it there and said, you know, this baby's going up into the 18s. And sure enough, it exploded. So that was pretty cool. You know, let's see, what is that? And yeah, so that's it there. So how's that? AFA, is that all right? So at this moment in time, we're flirting with a sell today. That's what it is. I knew we were flirting with something. So, but we're in a weekly buy, so you don't want to really get short. You just, if you were long, you take your profits from all this wonderful win and wait. We wait for the next buy. Okay? Let's jump over to Mr. Smith. Okay, I think I'm giving you a generality. Let me just show you through the eyes of our Chicago quant, because you can tune into the J4X and do it yourself. So we start off with Swiss for a real quick recap. And the Swiss is moving down in our work. So there's a Swiss. It's playing with a daily sell right here. It's flirting with the weekly sell as we speak. This is against the dollar. Then we looked at the euro, and the euro went into a daily buy yesterday, and it is flirting to get into the weekly buy now too at the same time. And you can see it's up today, so forth. Then we went into the cable. Cable's doing the same thing. It's fighting to get going, and it's trying to get into a buy. Not done yet, but the weekly is having its issues also. They're moving slow. So I hope that's a good recap for you there. And then where are we at now? Oh yeah, we're looking at GBP NZD, and we just looked at the Aussie. Where's that at? AUD. Don't we have an AUD in here? I don't think we do. Let's see. AUD JPY. Right there. So we finished that off. Let's see. Hey, no problem at all. And believe me, you're welcome to ask as many questions as you want throughout a webinar. Just has to get in line, that's all. Smith says, are you by any chance available for one-on-one session mentorship and programs? Sure, just talk to Robin. Robin will set it up. And it's Chicago Quant Technologies. You can go up on the web, find him, and you can give him a call, and he'll set it up. Also, just show up here every day. Also, we're always yakking away here for an hour. And everybody knows I like to yak. I like to sing. Let's see now. From there, and if you want to see any particular product right now, just say it. Put it up on the chat line. We'll go after it and take a look. All right. Where do we go from here? Oh, yes. So we finished the Turkish lira. There's a Turkish lira. You can see we have 5 out of 6 days have been red on J4X. We're getting a little bounce out of it this morning. Let's put it up over here. There we go. Look at that. A little strength really kicking out on it. We've been in a weekly buy for 4 weeks, but it's been kind of sideways. But now it's really starting to push. We're going to get a little push in here. Let's see what's going on. I'm not sure what, but you can see right there we are above the 0 line here. So the buyers are coming in on a short-term basis. Oh, a sip of the tea sounds good. All right, from there, we go over to the Canadian. In a lot of ways, that's the Canadian always represents, or not always, but it represents. It's an oil country and a mineral country, and very successful. And it's protected by the United States on one border side itself, and then you got the top of the planet from there. Actually, to some extent, I guess we surround it, don't we, with Alaska? So America surrounds it. So I mean, they're allowed to be in more of a la-la land than Americans are in la-la land. So. What you get is the Canadian against the dollar. Usually it represents strength in oil and strength in gold and so forth and so on. Let's see. Regarding Chicago Quant, would you please report how to get it? Just go to the website. You can give Robin a call. You could do that. Or email them. One or the other. I think if we post it, I guess. Let's see here. If I say hi, like that, see that? There it is, right there. So I get it up on the screen. Where are we at with the euro? The euro, Turkish lira. Oh, that's right. We're jumping to Canadian now. That's what it is. So let's jump over to the Canadian, and we'll show you what the oil sector is doing in just a quick splash of it, and what the metals are doing. This is probably, this is kind of interesting on Turkish lira as I'm leaving it. We'll see what's going on there, but that seems to be a nice little twist onto the upside real quick, And you can see, let me just go back to it again on J4X. That's definitely seems like a push going on there, on the upside. We'll see if there's something going on there. I hope not. I'm hoping that it stays as quiet now that they give out free puts with the purchase of their currency. But you can see here, look at it on J4X. There's a big spike there too. Something's juicing up. It's getting a little firm, a little bit more than usual over the last couple months. All right, back to Canadian now, unless anybody wants to see something different. Right there we are. There's Canada. And you can see Canada, been moving down against the dollar. It tried to bounce off of the lows here. But it's just gliding down. Over on the Chicago Quant, you can see we are playing with the 50 percentile right there. From inside its range for the last 2 years. And you can see we're in a weekly sell. So the natural tendency is for this thing to go down against the dollar itself. In other words, it's gaining in value against the dollar. That sounds better. Let's see. From there, let's see. From there, we go and take a look at oil. So we're going to do this. We'll leave Canadian up there just to be able to see Canadian on the J4X. And let's go over and check out the oil. And there's the spot oil here in the States. You can see it's trying to perk up today. It's in a weekly buy for a bunch of weeks, since the 70s area here. And it's the green line is a good distance off from our time manifolds there. So that's what these mirror image lines are. I call them nonlinear time manifolds. That's what they represent. And so what happens is that when it pierces it, like here, and it bounces back out of it, you get some real good strength out of it at the same time. But when it tops out, like it started to top out here, 3 days later, it finally gave us a peak, and then the daily gave us a good peak and got us into the sell. In this case here, though, that was a big slam. With oil trying to move up, you would assume Canadian would be moving down. And that's what it's doing. You see all that red on the hinky ASCII bars on the J4X. There's a lot of pressure on that product. And that makes sense that it should be that way. Let's see, what else can we say about all that? And I hope make money online. You see that, the Chicago Quant stuff right there, where I said hi. And it's my Albert Einstein look on a picture. Let's see. From there, we take a quick look at gold. Because both these products are very big in Canada. I think they're the second largest producer of gold, and they're like the second. I think it's like per capita, they produce 3 or 3.5 million barrels a day for a country with 30 million people. So that's pretty cool there. Just go to the website and email them. So it's like Chicago Quant Technologies, one big montage. Let's see if I can find it here real quick for you. Oh, I know where to go. I can do it this way. And you'll be able to see there it is, like that. See the email there? There we go. So Canada being, a very solid oil producer for per capita, and being a very strong minerals country with gold and silver and so forth, and I think they're like number 2 in silver, number 2 in gold. They're very productive, let's put it that way. And because of that, the currency really reflects that. You see that type of reflection from it, and that's why we go from oil, then we jump over to gold. Let's show you the gold right there. And you see gold is trying to bounce up too. Went into the sell here though, and it's in a sell, but it looks like it was this morning. I guess that's why the green line was there. We put it up on the top chart. Until it officially closes, we don't consider it in a buy. But one thing is for sure is when you see that strength, you want to not be short. In this case, also at the same time, we've been in a weekly buy since the 17 and change area. No, it's like 18 and a quarter, 18 and a half. $1,850 area, that type of thing. So you don't really want to be short this at any given time. You just want to take profits. Like, when we went into the buy here, in this case here, it went into the buy, and it never even gave us a sell. It just stayed in the buy again. Now it's finally pushing into the sell. I think that what it really comes down to is you don't want to short it while it's in a weekly buy. You just want to take profits and then wait for the next signal. And that's the way we always look at things around here. It's always a slow, methodical, strategy of just, trying to make money, not trade. That's the idea. You trade, but you're trying not to get too crazy about trading, and you're trying to make money more. Let's see. So after we leave that, we drift over to the South African Rand because we're looking at gold, and normally when gold is gaining in value, we see the South African Rand going down against the dollar, which means it's gaining in value also. So let's take a look at that. Right there, you see it. It's making new lows, it looks like. Let's put it up over here. And let's see if they are at the lows. The Hinky Ashley bars have a tendency not to show you exactly where we are. Remember, they're an average, just like I was talking to Kelly about. They're a moving average of the bar. Yeah, see, okay, so we are making some nice new lows. We've taken out these 3 lows or 4 lows right there, and we're moving down again. That's the strength in the metals complex there. And it's like a 5-month low. October, so November, December, January, February, and March. Over a 5-month low. We're looking at a 5.5-month low at this point. All right, from there we jump over to right there. It's like Baltimore of currencies. The currency we will not say out loud. And it's moving down. You can see it's in a daily sell for a couple of days, and we've been in a weekly sell for going on a 3rd week. So it went into the sell this week in here, and it's pretty much not really gone anywhere particular. And it's just now starting to go after these lows before the invasion of Ukraine here. So we'll see if it drifts right back into that area there. We've said this looked like an island topped, and it is an island top. From there, we go over to the Japanese yen again. This time, instead of in the Aussie yen, we go take a peek at the what do you call it? The I'll find it in a second. The dollar yen right there. And then what you have here is you see the weakness in the yen right there. And we've been in that buy because like we were showing you in the Aussie yen. You can see here in a daily buy for a nice ride, and it went into the weekly buy at the end of that week, and it was zoom, 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 zoom. And now you can see we're doing a little topping in here, and we're playing with a sell as we speak right there, which we can throw a red line right there just to emphasize the fact that it's below the 0 line. All right. Let's see. Where there we go is the southern neighbor of ours. We go down to the Mexican peso. So we look at the Canadian, and then we look at the Mexican peso, and then we're done our currency pattern. And if anybody wants to see any pattern, any other pairs trade, just throw it up on the line, and we'll take a look at it for you, and we'll tell you what we see out of it, the analysis of the math. All right, let's go over to it, and that is right. Oh, we didn't show you the yen. Look at that. There it is. The yen's doing the same thing on J4X. Matter of fact, look at the volume indicator. It's also peaking out at the same time. So, and the white line has pierced. Well, it pierced all the way back in here. It's joining in with Chicago Quant, and you can see we've been in a buy all the way up into here, and it's just breaking down today and giving us that warning, Will Robinson warning. What else can we say about it? That's kind of interesting, is seeing it, the green line is so high up on the weekly. So no real damage being done yet, but we'll see. We're getting this daily sell signal starting to generate. There's the peso. Peso's been, they broke out of the top end of the range, And now they are banging away in the opposite direction, which is really cool. It's pushing down in the bottom end of the range. So let's show it to you on the Chicago quant side of this. Where is it at? Mexican peso. Right there. Now you can see it's right here. These lines, these two blue lines, maybe we should make them something else to emphasize them even more. Maybe make them gold or something like that. Like that. And that. This is a trading range that this product's been in for like over a year. Matter of fact, over 2 years. And at times it breaks above it, but it falls back inside of it or rides it. As you can see as we glide along, that's the range. And it just hangs on those areas. Now, we're underneath just like we've got up for a couple days above it. And now it's playing the bottom end. Normally we Fibonacci these things, but this range is really tight and very impressive. You can see we went into the sell here, and it's just been one slow grind down from the top end of the range to the bottom. We were in a weekly sell here, but we were in a daily buy here, so you didn't get your head, you didn't get hurt. It protected you. You didn't get caught in that short there. So that's the best way of looking at that. AFA. Plus 20 pips in AUD JPY may be interesting. All sells rejected since 6 a.m. Oh, really? They're having a problem trading it at the moment. That's interesting. I know that they're really freaked out about the quick jump, not the quick jump, but the jump up in the yen. They've been very frustrated with that in Tokyo, I understand. Because the Bank of Japan really does a pretty good job of controlling everything. Just like the quantitative easing stuff that the Federal Reserve does. I don't even know how to get... we have these conversations here every so often. How do you really define manipulation when you have the central banks being the buyer of last resort nowadays? It's really, really hard to justify calling anything a manipulation, because everything's a manipulation. Yeah, and it freak out. It's one of the more stranger eras in financial history, I can tell you that. So everybody here trading or watching the markets, this is not normal, okay? And it hasn't been normal since 2008. And so, what is it, 2022 now? So it's 14 years we've been going through this. And supposedly this is going to be the month that the Federal Reserve is going to stop buying. They've been buying. Not only do they keep interest rates low, but they've been filling up a portfolio. Went from $4 trillion to $9 trillion. So, you just have to scratch your head and say, what's that all about? The days of the market basically being the price discovery system has really diminished. Yeah, legal. I like to call it state-sponsored terrorism. Hey, 54, where you been hiding? Yeah, I call it state-sponsored terrorism. State-sponsored terrorism. Well, let's see. What else? Where are we at? We just left the Mexican peso, so I guess we go from there. You like that? Yeah, state-sponsored it is. It really is. All right, from there, we'll jump over to the energy sector. Let's take a look at the Brent. There's Brent. You see it's been breaking down for the last couple of days. We did have oil up there earlier. Let's put it up here again. And let's see, where's it at? Let's go to the back contract, or June, instead of the spot right there. You see it's trying to lift. So, we're getting a little pressure on the upside, but still in that daily sell. But then again, I can kind of sound like I'm whining, but it's in that weekly buy. You can see it's been in there since the back there in the 65, 66, 67 area. So I'm not really sure if there's much more to be said. about the oil sector. Like in other words, when you try to predict the future of it, I only trust the quants at this point. The I guess you call the fundamentals or the logical side of it, it's kind of gone. Price discovery and using logic. Janos used to have the head analyst for Dukascopy used to have a couple different videos out on that. It's gotten to a point where none of it seems to want to react that way anymore. With quantitative easing, there's not much of a reason to believe that it's going to. Until we get back to free markets again with free people, it's basically I don't really see a lot of gain from. I mean, I've seen the logic of the quantitative easing made sense, but it didn't make sense to go on for 14 years. I could understand, the first 2-3 years and then let the economy start to grow again naturally. But when you manipulate them all the way up until this last month for 14 years, it's not a good thing. You know something's going to not play out in the end right. All right, from there, we take a look at nat gas. Let's see what nat gas looks like. Right there. And they're trying to move down, but not doing too good a job. Yesterday it went into the sell. You can see the pressure on it. It's back up a little bit more today and trying to get through the line right there. And then we've been in that weekly buy since back in here. So, from the $4 and change to the $5 and change a cubic foot. Now let's take a look at it on J4X. There it is right there. It's trying to roll over still there. We'll see. This will start to straighten out if we keep that strength that we're seeing over on the Chicago Quant. We keep on seeing this strength here. We will see this turn back up. And then at the same time, let's take a look at the European market where it's been trading in the 27s. And let's see where it's at today. Yesterday we saw it at 26 and change. So, it's just barely. It's right hanging underneath the 27. You see we're having a little weakness develop right there. But we have a lot of green. And then you can see we've been a lot of green there. And, we're just generating a couple of reds at this point. All right. From there, we go over to... Let's see. So we did the energies. Let's do the metals now. We'll go take a look at gold and silver. Well, we've seen gold earlier. There's pressure on it there. And let's just put it up over here real quick. And see, it's trying to lift from yesterday's weakness, but our zero line hasn't been pierced yet. Same as here on Chicago J4X. J4X shows the white line breaking down, and this is our zero line, really, the dashed line there. Then let's check out silver, and there it is right there. Let's get it up on there. Silver, same way. This is the third day in a sell. Oh, what do we got here? 54 says, Doc, I see the GDP dropping to 2%. Yeah, I hear you. That's what they're looking for, but it's not really reflective very well right now because of the economy is just opening up again, so the numbers are going to be much higher. But yeah, year over year, I could see just 2%, 2 or 3% tops. Inflation keeps rising. That means the Fed will raise rates in a bad economy. So I should take a S&P 500 put to cover myself during that next 12-month period. Exactly. Matter of fact, if you have a portfolio of any form or you're invested in funds, what you would really want to do is you would want to sell the call and buy the put and lock yourself in a little bit. I think you'll see more strength. I think there'll be some more buying, nibbling away. There's not many places to go, and stocks can do well in inflationary periods, but then after a while they start to diminish. So yeah, somewhere along the line it looks like we'll see more weakness. Now, since you brought that up, why don't we do this real quick? We'll jump over to the indexes. We'll take a look at the S&P 500 in particular, and then we'll go back from silver to copper. Where is it at here? It's here somewhere. There it is, S&P 500. And here it is right there. We're winning a weekly buy since here. We're still in a daily buy for a bunch of days, a couple of weeks now. Right there, you can see that. And it's been just riding up. You can see how the green dots here and the green hinky ashy bars there. But yeah, you'd probably want to put a collar on if you have a stock portfolio. You want to sell the calls, buy the puts, and just do it for like a 7-month, 6-month thing. This way your portfolio is protected. You don't have to worry. Let's just take a sip of the tea. That's good. So yeah, right there you can see we're pressing. It's trying. Remember, this is the end of the month. Funds like to dollar cost average in. I mentioned it yesterday. The Trader's Almanac, I think, has it. When you have 4 days after the fourth Friday, or 3 days after the fourth Friday. Let me say that again. When you have 4 Fridays in a month, and then you have like 3 more trading days or 4 more trading days, the markets tend to go up like 95% of the time. That's because of the dollar cost averaging thing going on in a solid week. In other words, funds like the dollar cost average in. So, and they like to average in the most at the end of a month and at the beginning of a month. And that's how that stat kicks out. All right, from there, we're looking at silver. We saw silver on J4X. Where was it? It was down for a third day. You see the red there. And then copper. Let's see what copper's doing today. There's copper. And you can see copper's, in a daily buy for a day. Now this is the second day. It's lifting up again, or it was lifting up again. Hard to believe, with the inflation and so forth. Again, when you have central banks, I don't even trust that the Federal Reserve is going to stop. I really don't. We can't see all what they do, and they refuse to allow themselves to be audited. So we have no idea. They could be nibbling in the markets at given times, just nibbling away. You just never know. I take them serious. They want to keep a stable marketplace. They don't want to see people see their retirement funds collapse. None of that stuff. They don't want any negative. They want a sideways positive. They just have to stop floating money for the government itself. If they would just stop that, it would be better. I don't mind them perking up, the public, but to perk up the government spending, that's not a good thing. All right, from there, let's see. Okay, so that's pretty much it. We've looked at the metals, we've looked at the energies, we took a look at the stock indice, the S&P. Let's take a look at the other one, the hot one, the NASDAQ 100, or right there, it's on Dukascopy. It's called USA Tech IDX 100 Tech Index. That's the NASDAQ 100, not the composite, but the 100, which has every major company that we use every day in our lives. In other words, Google and Amazon and Cisco Systems and Microsoft and Intel and some of us Tesla and what else is there in there? Apple Computer. It goes on and on and on. NVDA. Just everything that's part of the modern society, and the companies that are powering it is in this index. And so it's become less of a speculative index and pretty hot and heavy index. It's got some Fortune 50s in there and Fortune 10s in there. Definitely quality companies. And let's take a look at it over here. Right there. It's moving down a little bit today. You can see it's red. Nothing major. And at the same time, you can see, it's still in its daily buy since back in here also. So it's been like, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in a buy, and it's been in a weekly buy for 3 weeks now. So it's been holding on very, very well there. Was it Money Online says, I wonder how the stocks would do up in an inflationary condition when the borrowing costs and operating costs go high. Margins are squeezed and less profit. Earnings per shares will probably be reported. Correct me? No, you're right. What happens is that the companies that do well are the ones that are like necessities, and they what was it? They have the ability to raise their prices, and so they're the ones that do pretty well during inflation. Then there becomes a point halfway through the inflation where the markets start to take profits if economic growth doesn't keep on showing life that it's going to come back, earnings per share, because the mother's milk of stocks is EPS, earnings per share and earnings in general. So no, you're right. The inflationary conditions, when borrowing costs or operating costs go higher, they have to raise their prices, and the ones who can't raise their prices are the ones you're going to see fall down, like luxury goods. So, things like that. Where people can say, okay, I won't buy it this month, I'll buy it 2 months from now, or something like that. So no, you're right. You're right. But at the same time, because of inflation, it allows them to raise their prices. So that's kind of like the trick of it all. That is why I see Russell 2000 taking a big hit shortly. Let's see what it's doing today. It's kind of plateaued the last couple of... there it is right there. You can see it right there. The last couple of days, yeah, it plateaued there. But yesterday it spiked up. We were in a daily buy off of here the last 3 days. And we've been in a weekly buy for the last 4 weeks right here. Let's put that weekly buy in there. But you can see here the Russell 2000. Oh, did that wrong. The Russell 2000 has been kind of docile. Let me tighten this up a little bit and you can see. The all-time highs were in November, up at around the 2400 area or 2500 area, something like that, 24 and change. And then you can see, it went into a weekly sell here, and it stayed in a weekly sell until 4 weeks ago from here with the Russell. And the dailies, have been all right. Daily buy was right there. Caught them move nicely. In this case here, you were in a sell, and I guess you can move that over. We had to put a new contract in, so that's why it's a little jumbly. And let's see, there's a sell right there, and then let's put that buy in there like that. There's the buy, and that buy is good, and we can take that sell right there. So let's widen it out. So yeah, and then you can see it went into a buy right here. Let's put that in there. And change that color. And it didn't last long at all. But it was in the sell, so you didn't get a chance to get too burned out of it. Actually, you didn't get burned at all. And then it goes into the sell there, and you can't take that either, because now we're in the weekly buy. So you're kind of stuck on both these signals as a neutral. Then it gets into the buy right there, and that's where you get your winner chicken dinner. That's why I say, traders, the idea is to make money, not necessarily just throw trades on left and right. Let's see. 54 says possibly we are in a bear market at the market. Well, everybody thinks we're in a bear market now, and we went down pretty dramatically, about 15% in the Tech 100. And now we're only down about 7%, 6.5%. The Dow Jones Industrial Average got down about 10%. The S&P 500, same thing, about 10, 11% for the year. Now they're only down about 3% each. So they've had some nice bounces. This could be, for those that follow Elliott Wave, this could be literally the B on the upside from the A that was down. And then we're going to go find a C on the downside again. So, with when you combine together the Federal Reserve perking the marketplace up, combine it all together, that's what you get out of it. I mean, right now the Dow's only down 88 points. It's like insignificant, a quarter percentage point, meaningless. It's background noise at this point. So, all right, seemed like we had a really lively webinar today. I'm really glad everybody stopped in to say hi. I myself will say goodbye. Markets are open. We're going to get to trading now. So, Doc the Cowboy here says, happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our Dukascopy trading friends. All right, traders, see you later.